to episode 3.
Yep.
Episode 3 of Pip Chasers.
As you can see, guys, a bit of a change of scenery. It's not the local normal office that we're in. We're actually in Birmingham at the minute. We're doing a bit of marketing, we should say, this afternoon.
Yes. So big up all my students. If you guys managed to find a little surprise in your dorms today, that's from us. And like Travis said, we are in a different location. We're in a location that has been a big part of our history still. Before we did have our office, this was one of the many locations where we'd come and do some analysis. And this is one of the early days of Forex when we was really beginners. And we'd come here on a Monday morning, afternoon, and spend hours here just comparing notes and comparing ideas in terms of charting and chart analysis.
That's it, man. So one more thing to point out as well, as you can see, so we've actually got the REBIRTH hashtag Pip Chasing jumpers, or hoodies I should say, that have come out as well. So these, the way you can kind of get one of these as well, they're exclusive, students only. So that's what we want, man. So literally, we're into our clothing, we're into obviously looking good at the same time, feeling good. So yeah, we've got the jumpers. Obviously, if you get yourself on the course, they'll come with the course. So, as I said, it's a team effort, it's a team society trying to build a massive journey for it. All of you guys can come along. So, grab your hoodies, man. Get involved.
Get involved,
Get
man.
involved.
I don't know about you guys, but I'm liking the look of it. The look of Chase, the look on Travis.
We've actually got them in white as well. So, for those winter nights, you might want to blend in with some snow coming up and whatnot. So yeah, black and white. Obviously for certain individuals, we might have a different colourway perhaps.
Yes, stay tuned. We're gonna have.
You never know.
You never know. But like we said, the black and white right now is gonna be for students only. So hold tight, all my students. You guys are the future, and you're definitely the future of the Forex markets. So moving on, talking about this last week of trading, it's definitely been an interesting week. The pairs that I was following, all the traders that was following GU, GJ and EU, was all waiting for a breakout to the downside. And even from last week, you may have heard us mention that we were waiting to short, especially GU. So it's been an interesting week for me. And what about you? How's your week been on your pairs?
Yeah, so obviously I do a few pairs at Nathan, so I actually look into EU and GU. Obviously we was looking to short on GU from last week. Going into Monday's session, obviously we'll talk about that in a moment. Took my eye away from GU for myself personally, so as you may have saw on YouTube and on social medias, I do UJ as well. So I had a kind of 2 week long term analysis on UJ, which was straight going down all week. So I picked the shit out of UJ this week, I'll be honest with you. So that's what I focused on with a bit of EU towards the end of the week. So yeah, man. So what we're gonna do. This one's more of a technical day. So obviously we went through a bit of risk management last week. We want to give you guys a pure, possibly a top-down analysis on a few currency pairs that we do ourselves. So for me personally, I'll be talking through, obviously, I looked at UJ last week, and to show you how UJ planned out. And I'm also going to bring in another pair that I told you that I do, Euro CAD, and kind of give you my predictions on next week for Euro CAD.
And from the south, guys, I'll be talking about GU. One of the pairs I'm frequently mentioning in Pip Chasers, GU, and also going to talk about EU. I'm going to have an interesting story for you guys as well about my own trading with EU. I think we can say I didn't have as much of a successful week as Travis, and the reasons for that will be made apparent as we get into some chart work. So without no delays, I'm going to let Travis start it off today, and I'm going to give you guys the technical breakdown. Like Travis said, today's going to be more technical, so those of you that are already into trading, you guys are going to really find this beneficial. And those of you that are not yet into trading, you might find, interesting. You can see what the type of things you will be learning, and you never know, months to come, you can be able to do your own top-down analysis for your own pair. So Travis, do you want to take it over?
By all means, let's break it down, guys. So as I said, straight into USD JPY. So this is what we kind of looked at. This is what the charts perhaps looked at at the start of last week, guys. So obviously I kind of broke it down in regards to what's happened on the previous episode. But literally, just to show you what I was expecting, we was expecting a pullback, but then continuation of some strong USD JPY bullish momentum to the upside. So let me just quickly go straight into it, guys. Let's see what actually they look like at the end of the week, and what we're looking to expect for next week as well, guys. So as you can see, okay, perfectly, guys. Let me just get rid of a few arrows. I was expecting that downwards movement and then a pull up to the upside of a target of around 113. Okay, so we actually fell short of about 20 pips of 113 this week, guys. As you can see, the overall bias, always expecting a retracement and then that buy entry towards 113. So guys, what was I expecting that? Let's break it down. I'm going to do a top-down analysis for you guys. So let's start on the weekly time frame to kind of give you a reason why I was expecting more bullish momentum. That's if the Wi-Fi on this place wants to work for me. But literally, guys, as I kind of mentioned previously, I'm not going to go into too much detail because you can find another detailed video on UJ. But bear with me, guys. So yeah, as you can see, I wanted to compare this time last year to this year currently. And so as you can see, we did have in September, this time last year, between July and September I should say, we had the price fall underneath that weekly time frame of weekly key level of 111,300. So the price was trapped underneath that weekly key level, and it wasn't until I think it was the second or third week of September where we broke to the upside and continued bullish momentum up into the target of 113, to then the monthly time frame, monthly key level time frame as 114,500. So same again this time this week, guys. So we did see the price getting trapped underneath a weekly time frame of that weekly key level, I should say, at 111,300. And then same time again, probably third week of September, last week actually, we did see that break above and that closure of the candle to the upside above that 111.30 key level. So what I was expecting, guys, is obviously more bullish momentum and that breakthrough to the upside with my main target of 113. So as you can see, we was 20 pips above, or 20 pips just below that key level. So what I'm actually expecting, am I expecting more bullish momentum to hit 113 and beyond, or are we actually going to pull back down and see some strength being lost from the dollar this week? So all I'm simply going to do, guys, is break it down from the weekly down to the daily time frame to actually see what's going on within the actual 5 days this week and what that's indicating to ourselves. So literally, guys, obviously I'm working within the channel here. As you can see, recent highs of that 113 was hit in July the 19th, and we are working our way towards it. As you can see, guys, we kind of had on Thursday a bullish hammer to the upside, which meant for me, I'm definitely seeing some more bullish momentum leading into Friday session. As you can see, we kind of met that same key level where candles closed in July at around the 112.89 zone. But then at the end of the session, we did see a pullback, almost looking like a dragonfly, but it's not a doji, guys, so be careful of that. So that's what's kind of thinking to myself, are we actually going to see a doji retracement, a doji reversal and fall back down to kind of test some key levels? I do have a key level here, guys, if I can just mark out this horizontal array. I do have a key level around this zone here, guys, of let's call it 112. So will I see a pull back here before more bullish continuation? For myself, guys, on this pair, if I break it down to the 4-hour time frame, I am looking for a slight pullback. As you can see there, guys, so I've had some slight retracement post. I think it was about 6 o'clock on the Friday morning. This key level is holding up, as you can see here, but I am seeing and expecting a slight pullback until a more bullish continuation to 113, possibly towards our monthly time frame target in a couple of weeks' time of 114,500. So that's myself on USD JPY. On the Monday session, I am going to be mindful, looking out for any retracements before I enter on a bullish momentum trade on this. For myself personally, probably won't trade the retracement. Probably need to see what Monday session has in store for me. But I am looking for a slight pullback to the upside to 113 and beyond. Guys, as I said, I haven't showed you this one before, but I also do Euro CAD, guys. Once again, I'm going to kind of break it down to you on a weekly, daily, and obviously 4-hour time frame, which is the execution zone in regards to what I've got installed for the upcoming week, guys. So if you look on the weekly time frame on this pair, last week we did have, as you can see there, last week we did have a bearish candle forming for the week. But as you can see, the price was actually sitting between the two moving averages, which kind of moved sideways movement in the market. So I wasn't actually actively trading EuroCAD this week. I actually wanted to see what played out this week, guys. So as you can see, we have had a lower high just here, formed last week. So as you can see, we had a higher high, then we had a higher low, now we've had a lower high. So as you can see, we are moving sideways on the weekly time frame with slight indications that obviously we are moving to the downside. Obviously the price at the moment on the weekly time frame is testing that blue EMA, but still closing above it. So all I'm simply going to do now, guys, step down to the daily time frame. And as you can see a bit more clearly, we are in a downwards channel. So we are creating, obviously got a higher high there, then you've got a lower high. So a higher swing high, and then we've got a lower swing high here, guys. So we actually are moving in a downwards channel. Just wanted to show you one thing that's nice and clear to myself. We also got a nice moving average crossover to the downside. So we've got the blue EMA crossing below the red SMA, simple moving average, guys. So what does that indicate to myself? That does indicate to myself perhaps more bearish action towards this obviously swing low, perhaps on this key level here on my time frame. Probably looking at around the 1.47 zone. At the same time, I have got a monthly key level, which is at the 148 zone, so that will probably be my first target. Before looking at these targets here though, guys, I would be looking at a break of this pink trend line. What is that pink trend line, guys? So that trend line was implemented on a weekly time frame, obviously going from a swing high to a swing high, breaking through. So as you can see there, guys, on this pair, we've had that weekly trend line be retested and swing back up, retested, and it's slightly swing back up on the daily time scale. For myself personally, I am seeing more bearish momentum. As you can see, we've had this little bearish channel over the past 2 weeks here. But this is a key area, which is the weekly time frame as well for myself, of 1.508. If I see a break to the downside of 1.508, my next target would be my weekly time frame, my monthly key level, I should say, guys, of 148. But that's probably perhaps a 2 to maybe 10 to 2 week. Sorry, that's perhaps a 10-day to 2 week target, guys. So that's my two pairs for this week, guys. As we said for ourselves, you may understand this, guys, but perhaps when you do a course with ourselves and you look over these sort of videos, looking over these videos, because when we was learning, we was probably using videos as well, probably not perhaps understanding it, but using certain confluences like moving average that I just spoke about quite heavily in this instance. And when I was learning about moving averages, for instance, looking at videos that perhaps we have done previously, you can start to relate in regards to future trades that you may be implementing for yourself, guys. So that's enough from me. Nathan, talk us through it.
Thank you, Travis. That was a great breakdown. Like I said, I hope you guys are being able to follow what we're talking about. And if you do want to actually follow and have a look at these pairs, we're using a website called TradingView, and that's where we do all our technical analysis. So getting straight into it, I'm going to start off by talking about euro dollar. I'll be honest with you guys, euro dollar as a pair I've only been trading the last probably like 6 weeks. So I don't know it like I would like to know it, but I have had some really great weeks of it. So let's go ahead and get into the charts. So starting on the weekly, as you can see, euro dollar has been ranging between 1.18 and 1.153 for at least the last few months now. If starting from May, apart from this fake out we had here, which tested our weekly mid-range, and it's called a fake out because it broke but then broke back above within 2 weeks. Now last week was a very interesting week for a lot of traders trading euro dollar, and I'll tell you why. If you're going into the daily, I had this highlighted range here. There's a range where I thought the pair would be ranging and making similar highs and similar lows. So for that reason, when it came to last week Wednesday, I actually had a short in this region here, and I was expecting price to fall and come back down to 1.13, just like it has done on at least 8 occasions within the last few months. what I didn't take into consideration was a key level. I missed the key level, so I'm going to bring that key level up for you guys now. So if I bring this key level into play, if I did have this in place, I would have saw that price on Wednesday retested this line, which is a nice mid-range. As you can see, if I highlight this area, you can see that price is reacting with it more on several occasions. So what it does, it kind of cuts this whole range in half. I didn't have this in place, so I wasn't aware that price may actually rise instead of fall, and it actually rose and made a similar high at 1.18. So looking forward, actually I'm going too fast. So I did have a short here, but what I did, guys, those of you that are familiar with a stop loss, well, those of you that are not familiar with a stop loss is a price that I set that automatically closes the trade when it reaches a certain amount of pips against my bias. So my bias was the price was going to decrease, but the price actually increased and started to increase in value. I had my stop loss up here. I missed the one, and I had it at 1.7. So my trade was open, and I was just getting further into a minus profit. I was making a loss. Luckily, it didn't go too far to the point where it wiped out my whole capital. On Friday, it was a really interesting day because it finally hit the top of our range and dropped down about 50 pips. Okay, 60 pips to be exact, alright? So, looking forward into next week, now I'm aware of what's happening in the charts. I am expecting it to test this key level here at 1.1650 approximately, before maybe range it up again. I'm expecting it to actually touch my descending trend line and my ascending counter trend line, because if I go back to the weekly, what I think may happen is we may make a right shoulder here to form a head and shoulders, another right shoulder right here, guys, before actually making the ascent downwards to test our monthly again. Okay, if that fails to happen, then as soon as we have a break of my descending trend line, my bias will actually change to a full-on buyer, and I'll be with the bulls. Okay, so that's the two possibilities for next week. I'll be just watching to see what happens at these key levels. If we have a break of the 1.18, then I'll be trading up to my descending trend line, and if it does fail to break this, I'll be shorting down to my next key level. So guys, that's my aspect on EU. I'm not going to bother going into the 4-hour chart for today. This is just my overall bias for the coming days and weeks, but it just kind of highlights the importance of key levels. Key levels is probably one of the most important aspects to technical trading.
So before you carry on to another chart, Nathan, you mentioned something called the stop loss, which you kind of briefly explained. Why would you implement a stop loss? Because as you said, the price could get to that level you're talking about, and then you've, in hindsight, lost that money. But why do you have it there?
Well, the reason for having a stop loss, guys, you may have heard us stress a lot last week about risk-reward ratio, and having a stop loss allows you to control your risk. That's what basically it does. You're controlling how much you're willing to lose per trade, and then you're also basing that on how much you're gonna win. So that's why we have a stop loss. I hope that makes sense, because I have a lot of people actually asking, so if I had £1,000 in my account, could I just lose £200 just like that? And the case is no. Here at Rebirth, we always advise that you risk no more than 2% per trade. So your stop loss will be always at that 2% or below. So anytime you get 2%, a 2% reduction in your capital per trade, there we go, the trade gets locked off and you survive to trade another day, safe to say.
So in hindsight, having a stop loss as well, always make sure that your analysis is excellent and to the T.
To the best of your ability.
Your ability. So it's a case of if you didn't have a stop loss, and the chart was going back and going against you, but then slowly it came into the profit for yourself. How good was your analysis? How much into your capital and how much were you risking before it actually perhaps turned around, if it turned around? So that again obviously tests how well you trade and how well you're analysing the markets at the same time as well.
Exactly. I'm glad you stopped me, because a brief little mention on the MAs here on EU. You can see here the MAs are actually turning. The MAs were facing down for the last 3 months, but they're actually turning. It's pointing sideways now. So based on the MA, guys, we could actually be ranging all the way until we actually meet this descending trend line. There's many possibilities, so I'm going to be monitoring my trades. I'll be monitoring the daily closes, and I'll be monitoring them once in the daytime, once in the afternoon, and any kind of reactions in my favor on these key levels, then I'll be able to drop down to my 4 hour or maybe my 1 hour and find a nice point of execution for my trades. So
looking at Nathan's charts as well, you may be thinking, okay, perhaps if it's moving sideways, is there enough trading opportunities within that sideways range? Most definitely, because if you look at the range, guys, it's ranging from 1.18 to 1.153. It's around 300 pips, guys. So that's a lot of trading opportunities and a lot of money to be made in the market.
That's what I'm saying. If you could consistently make 300 pips per month, you would be classed as a really, really profitable trader, and you'd be loving life. Let's be honest. So that's the kind of traders that me and Travis see ourselves becoming really soon, and that's why we're here putting in the effort and sharing that with you guys. So let's move on to GU. It's my second pair that I'll be talking about today, and this is a pair me and Travis both actually actively trade. You can imagine the pound versus the dollar, something that we're always exposed to. So let's go ahead and look at the weekly. So if we look at last week's candle, we can see that we almost got a gravelstone doji. The body is a little bit big, but you can see. Let's definitely zoom in on that.
Let's show these guys this doji, because this doji is a perla, and Nathan's it simply indicates to you what a dragonstone doji could indicate.
So as you can see here, guys, that during last week's trading session, the whole week, buyers were able to push the price up around 270 pips. So we've got another range of about 300 pips here, guys. So ranges are really important, really pinnacle in terms of taking profits in the market. But by the end of the week, sellers were able to take control and push the price almost to the same price as where the week opened. So it just shows that there was a lot of movement in the market last week, but the opening and close price was really short. So the main thing a doji signifies to you is indecision, isn't it? Simple as that. Simple as that. So an interesting thing for me with GU on the weekly closure, even though the sellers were able to push the price back down close to the opening, it did still close above my key level here at 1.30700. So looking at this, I would think to myself that we may see another retest of the 1.33 key level, and you can see that it's a key level that has been tested and reacted with quite a few times over the last 3 months. So 1.33 is a really strong key level, and that's why I think we've had such a big rejection of that. So what we can see for next week is either, if I get my arrow to make it a little bit more clear for you guys, like I said, another test of the 1.33, just because of this close being over this key level, or if we do start the week to actually break, you can see here last week we broke our monthly key level here, and what we may see is a retest of this line. A break and a retest is something that happens so much in the trading markets, so much in Forex, and a break and a retest is one of my key strategies for entering the market. So we have seen a break here, this candle, a big nice break of the monthly key level at 1.29600. we may see a retest and also a third touch of my ascending weekly trend line here, which is definitely going to happen. Whether it's going to happen here or whether it's going to happen further up here, at the moment I'm not 100% sure. So what I am looking for is at some point a third touch of my descending trend line, and we're going to either have a bounce and a break. Now, taking in the fundamentals for the pound right now, there's a lot of flaky Brexit talks. So
flaky Brexit talks.
Very flaky Brexit talks. And I mentioned last week that I am expecting weakness for the pound. I'm expecting the pound to actually come down and test a monthly at 1.16 like it did in October 2016. So we're approaching October 2018, and I'm expecting a big drop to the downside, even if it's maybe for a week. I'm expecting price action to repeat itself like it did 2 weeks ago. So that's what I'm going to be looking at, guys. Just drop down to the daily so you can see a little bit clearer. So you can see last Friday, like I said, it tested, and then we had a big, nice bearish engulfing candle, engulfed the last 3-4 days of price action, 5 days of price action. So that signifies a lot of bearish momentum. So if we manage to break this key level here, I'm expecting to have a bounce or break on my ascending trend line here. So that's what we'll be looking out for, guys. Stay tuned for next week. I'm sure me and Travis will both have some after and some reanalysis, and we can share what happened with the pairs.
That's it. And like as we said, the pound against the dollar, it's a very popular major currency pair. So I actually like when me and Nathan is probably one of maybe 2 pairs that we actually focus on together. So we can kind of I'm looking forward to analysing both of our charts next week, because as you can see, Nathan's got certain key levels that perhaps I don't have. At the same time, we're both looking at the same sort of bias for the start and the end of next week. So as Nathan said quite clearly, we've got a very bearish engulfing candle. I had to get that in 3 times then. Bearish engulfing candle. Engulfing a good 3-4 days price action. 5.
1, 2, 3, 4, 5.
Guys, I'm going to stick my neck out there. This pound's going to plummet like a motherfucker. It's going to plummet like a motherfucker. So, literally, hopefully there's pips in the market next week. We've got flaky Brexit talk as well on the pound. So, in all fairness, it does all kind of, to be fair for myself, so I did the dollar against the yen, and also then I did the pound against the dollar. So for me, sometimes if I see strength in the dollar against the yen, that perhaps means that there's going to be strength against the pound. So I do see the pound plummeting. It doesn't always work at the same time when we talk about the yen and the pound. But obviously 2 major pairs or 2 major currencies, the pound and the dollar, they kind of work in tandem. So,
and I think that's a video that we may do for you guys, just highlighting the correlation between different pairs and how you can use that to help with your biases. So that's something that we will put together maybe in a few episodes time. So stay tuned. Like we keep saying, there's going to be a lot coming for us. We're just getting started. The fire's burning strong. So there's going to be so much more episodes. I hope you're still with us at episode 100, where who knows where we'll be in episode 100. I'm putting a line that we're not going to be in England. We're going to be doing a special one for our 70th episode.
So always throwing out there.
That's what I'm saying.
It's flying me out, guys. So you know. And guys, we're opening that out to students as well. So guys that have not done the course yet, or guys that have already done the course, you've heard Nathan, we're looking to fly out. Let's get you involved. I'll put it out there now as well, guys. Before we leave, you know we like to leave you with a poll question. As we said, this poll question, we're going to do it on a Monday, because we kind of had a bit of, when's the poll going to come out? We're looking out for the poll. Monday evening, guys, that's when you're going to see the poll. I've got a question this week, guys, okay? So we've been talking about it. What do you think? Is the pound going to fall, or is the pound going to rise and get some strength?
What are we saying, guys? What are we saying? Have a little look in your newspapers. Have a little check on your Forex internet sites, and let us know what you think. Or go ahead and just use your own initiative. Get involved with the poll, guys. is the pound gonna fall or is the pound gonna have some strength next week? So yeah, I think that's it for the episode. But one thing, guys, remember we've still got our competition. There you go, you can see the 3 stages there. If you're going to go on the Instagram, you can see how you get involved. It's for a free 3-day full trading course. We're all about the Benjamins, baby, or the Lizzies, all about the Lizzies, baby. So if you like money, if you fancy learning a new skill that can earn yourself a lot more, check us out on Instagram, follow the 3 steps and get yourself involved. Tell a friend, tell your family members, tell your work colleagues. Rebirth holders are giving away a free 3-day trading course.